In this tutorial, we're looking at the Sigma 4-in-1 indicator, which is part of the Sigma indicator suite available at fxscripts.app. On the screen in front of us, we can see the Euro New Zealand dollar on the hourly chart, and everything you see on screen currently is the Sigma 4-in-1, so all the drawings. I'm going to walk you through the settings for each of these and walk you through how we could have played these trades as well. First things first, let's take a look at the settings. So the four indicators are the reversal print, which is this arrow and the dots that accompany it. These are the warning dots. We've got the liquidity candle counter, which is the background highlights here. And again, I'll talk you through exactly what each of these does. We've got the sweep detector, which is all of the lines on the chart. And then we've got the FVG and IFVG alert, which is the green and blue boxes, the fair value gaps. So Sigma 4-in-1 is the first indicator. It's very much the flagship of the four. You have two settings, sensitivity and length. These are configurable from values 2 up to 10. And the primary advice is to, when you place them on your chart to backtest, the default settings are 3 and 3. That works okay for some instruments, others you will need to backtest. And as you can see on the chart, we've got two trades that have come up. This one to the downside, this one to the upside. For any ICT traders, this is a very good example of a market maker sell model followed by a market maker buy model. And as you can see, the reversal print has captured this from the very top down to pretty much the very bottom. On the way down, this is when it starts to detect a reversal pattern, and it draws each of these dots as each candle closes. There's no repainting. This indicator does not repaint, so it's not until this point it actually detected that there would be a reversal to the upside. And the way to play this trade to the downside, the fair value gaps are what the system uses as entry. So as soon as you have a reversal print that's swept liquidity, so here I'll talk you through this in a little while, but these liquidity levels have been swept. It's formed a high. There's been a reversal print. You'd normally tell people to match this up with the divergence from the power delta and the manipulation ribbon. They're a crucial part of the system. But if you were to take this, then you would target the next major liquidity level. This is set to the daily. And you would place your stop loss at the swing high. And that's a nice 2.37 to 1 trade. You could, if you wanted to, take it all the way down to when you get the next reversal print. Or you could target these liquidity levels, but we've got a major liquidity level here. So for me, I like to trade anything from 2 to 1 to 3 to 1. So that's 2.4. That is how I would have played that trade. So that's the reversal print. You can obviously switch on, switch off these master settings up here. That will hide it if you don't want to use it in your trading. Other settings we've got that are form part of the reversal print. We've got a opening gap filter. So if the market's open and there is a gap, you can see here there's Sunday. Sometimes that can trigger a reversal print purely because the gap can affect the algorithm. So with this toggled on, you can counter that. It's on by default. there's a price filter. It's an additional price filter. So it looks at price, and if price isn't confirming the print, it won't print, and it can help you rule out some false signals. Same with the volume filter. That looks at the volume that is accompanying the trade. You need a decent amount of volume in order for the trade to be successful. So there's a threshold. This is set to 3. If you go upwards from 3, it's higher. So it requires more volume to make the trade work. The default is 4. But again, back testing of this instrument led to the conclusion that 3 is the best setting. That's the reversal print. You can obviously change the colors. You can show or hide the warning dots and the breakout marker. And you can choose size and the shape. If you don't want a triangle, sometimes it can be a bit misleading to have a triangle. It looks too much like a go, go, go signal. You don't want to be taking this just by itself. You want it to align with the other rules of the system: liquidity sweep, divergence, fair value gap. Next thing I'd like to show you is the liquidity candle counter. That is this background here. Just make it a little darker for you. So this counts, at present, this counts 80 candles. That is 80 candles between this point and this point. The reason being, when liquidity is swept, like it has done here, you would like the starting point of that liquidity to be at least 80 candles. I normally have this set to 60. For most instruments, it works well. Euro NZD, it's set to 80. You can configure this how you like. The recommendation is 60 candles. And that allows, say on the 1 minute chart, that would allow liquidity to have rested for an hour. And by the time it's swept, there'll be enough stop loss orders placed above that you'll get a decent reversal reaction to the downside. That's the theory. That's how it works. Next indicator is the sweep detector. These are all of the lines on the chart. We are on the hourly at the moment. It's recommended that you set this first one roughly 1, 2, 3, 4 timeframes higher than the chart you're on. That will lead to a stronger reaction when those liquidity levels are swept. So we've got this set to the daily. There are 100 historical lines painted on the chart. Don't set this too high, otherwise, in fact, I think max 100. That is the maximum. If your computer's running a bit slow, you can take that down to 50. In fact, I think 50 is the default. You can also set the line thickness, the line style, and the color. You can choose to show or hide. So this will make the daily disappear, and then you're left with the 4 hours. This is often best to set to the next one down. That was the 4 hourly. You can obviously set it to the 12 hourly, and then you could set your third one to the 4 hour, which is obviously a couple of time frames higher. I personally wouldn't have that on this chart. You can see that we've got some very nice liquidity levels drawn with the daily and the 12 hour. Looking at the hourly, how you would play this trade. And again, just like the downside trade, once you've got the print, wait for the fair value gap to form. I'll show you the settings for that in a second. Place your stop. at the swing low, target the next major liquidity level, i.e. the daily, and that's a 2.19 trade to 1. You could always leave a runner if you've got another level slightly above it. You could leave a runner, and that gives you a 3 to 1 trade. Final thing I wanted to show you is the fair value gap indicator with built-in alerts. This is fairly common type of indicator that's part of ICT trading. Any ICT traders out there, it's included in this because it forms an integral part of the system. It can help you look for your entry points. You could also, if you're feeling a little conservative, target fair value gaps also. This is roughly a 1-to-1 trade. You could have placed your stop at this swing low for a 1.79. So again, it's down to your level of risk and how you like to trade. In terms of settings, you've got bullish and bearish on off colors. Midline paints the midline. That can also be an important level. You can set the number of days look back. The maximum is 500. So if you're trading the daily or weekly, then obviously you want this setting higher. If you're trading the 1 minute, 5 minute, you don't need this as high. So to save on computer resources, you can pull this right down to the last 10, 15, 20 days, whatever you're comfortable with. This setting, it deletes filled boxes. So once an FVG is fully filled, i.e. prices pass through it, it will delete and it will leave the ones that are unfilled. That is off by default. Use midline as opposed to full fill. So that will mean that, for instance here, where the midline has been tapped, that's when the FVG stops painting. I'll just make this darker. It'll become clearer. So you can see here, the fair value gap paints all the way until it's fully filled. If you use midline, the wicks from these candles have passed through the midline and it's therefore stopped painting. And then the final setting, use candle bodies instead of wicks. So that disregards all wicks and it uses the body as the fill. These settings dictate the alerts. So whenever you set alerts, whatever you've set in the indicator will also be carried through to the FVG alert settings. So in terms of the reversal print, you can set when a reversal print is started, which is when the warning dots start to appear, when it breaks, which is when in this case, the triangle appears. And you've got that for both bullish and bearish. You've then got unconfirmed FVG creation. So that's when an FVG is starting to be painted. The third candle in the sequence hasn't closed. It's like an early warning system if you need it. Then you've got confirmed, which is when the third candle in the sequence. So in the case of this fair value gap here, it's created by this first candle, this second candle, this third candle. It's whenever the top of this first candle and the bottom of this third candle don't overlap, it creates a gap. And once that third candle is closed, you'll get an alert for confirmed. You can then also choose to get an alert when it enters the latest. So say if this was the latest FVG, if price came down and tapped that, and then went off to the upside. If you didn't want to place an order, place a limit order, and you wanted to actually know when it had been tapped, you could set that alert, and if there were a tap at this point, then it would trigger the alert. And then the threshold is what you've chosen in the settings, so the midpoint or the full. So if price were to retrace, come back through this candle, you either get an alert when it hit the midline or when it hits the other side of the zone if you were trading inverse fair value gaps, and that is when a candle has completely passed through in the opposite direction and closed below. Then that's a bearish setup. If you want any more information on fair value gaps, there's a ton of videos out there on YouTube you can check out. By all means, you can ask us any questions. We've also got the education hub on the website fxscripts.app, which you could also look at too. Okay, well, that is the Sigma 4-in-1.